Good morning and welcome to today's presentation with Nolato. With us presenting today, we have the CEO, Christer Wahlqvist, and CFO, Per-Ola Holmström. If you're calling in and would like to ask a question, please press star 9 to raise your hand and star 6 to mute yourself when you get the word. You can also use the form located to the right. And with that said, please go ahead with your presentation.
Okay, good morning everybody and welcome to the presentation of the second quarter for Nolato Group. Turning to page 2 in the presentation and the summary of Nolato Group. We had during this quarter sales that amounted to just shy of 2.4 billion, which then gives a currency adjusted organic growth of 4%. We saw growth in both business areas. We saw a sharp increase of our EBITA margin, increasing 1.6 percentage points to 11.6, and creating an increase of our operating profit by 13% to 277 million, despite a strong currency headwind. Turning to page 3, summarizing up the Nolato Group and the two business areas. So the group is built up based on two distinct business areas, with the medical solution being the largest portion, and then engineered just close by in size. If we turn to page 4, focusing on our medical solutions business areas, here you can see a graph of 20 years of consecutive growth. Of course, we are focusing on continuous growth and global expansion with this business area. Turning to page 5, summarizing up our focus products areas within medical solution. Starting in vitro diagnostics, it's a high volume market with good growth potential going forward. Then we have our cardiology part with the lifetime implants and very high demand products. Third, pharma packaging, which is consistent of containers for solid and liquid drugs. We have our continence care part of the business, which is a very high volume market. Then we have endoscopy and general surgery, which is an area in some change with more focus on robotic surgery going forward. Good growth potential. Then drug delivery systems with strong growth potential based on large molecules that needs to be injected into your body. Turning to page 6, focusing on second quarter for medical solutions. So during this quarter, we are proud that we have increased our operating profit to 170 million, which is a good growth of that, even though we have had strong currency headwinds. Within the business area, the sales amounted to 1.350 million Swedish, which is an increase of 5% if we adjust for currency. We are continuing our expansion, and the expansion in Hungary, linked to a significant customer contract, is proceeding according to plan. And we have also recently decided to establish operations in Malaysia to enable our continued expansion in Asia. Turning to page 7, focusing on engineered solutions. This business area is focusing on advanced technology and high productivity manufacturing on a global scale. So you can see a graph of our sales during 20 years as well here. This business area corresponds to approximately 44% of group sales. Turning to page 8, focusing on the different product areas within engineered solutions, starting with consumer electronics, which is then of course different type of surveillance systems, connected Wi-Fi systems, and those kind of things for home use and professional use. Second is the automotive market. We are, as expected, seeing some weaker market conditions if we look on a little bit long period. The third one is then hygienic, which is in a good growth situation, focusing on a different type of hygienic products for the engineered solutions market. Then we have materials, which is a little bit different in the setup, and in this area we have very premium margins corresponding to the rest of the business area. Turning to page 9, focusing on second quarter for engineered solutions, we had an increase of sales, approximately 1% if we adjust for currency, but we also had a strong increase of our operating profit, 8% increase, still with the strong currency headwinds. Below the surface, we saw continued positive performance for the hygienic market. We saw an increase in the consumer electronics, mainly through our investments in Asia. And as expected, volumes for the automotive are contracted. The EBITDA margin ended up at 11.2%, a strong increase with 1.2 percentage points. Turning to page 10.
Good morning, Per-Ola Holmström commenting group financial highlights. Net sales amounted to almost 2.4 billion in the quarter, representing a 4% growth adjusted for currency, despite heavy headwinds from the currency situation. The EBITDA margin for the group improved by 1.6 percentage points to 11.6%. The margin improved strongly in both business areas. The effective tax rate decreased to 20.3%, and we expect to be around 20% for the full year. Net investments was 188 million, again a quarter with high capex for the expansion in Hungary as planned. We expect around 850 million for the full year. Cash flow after investments was 128 million compared to 336 million because of the high capex investments. Earnings per share increased to 0.79 SEK compared to 0.63 last year. Return on capital employed increased this quarter, following the trend in the recent quarters, to 13.4%, mainly driven by the margin improvement. Strong net financial liabilities in relation to EBITDA after paid out dividends of 404 million in the quarter and was 0.7 times, enabling expansion and acquisitions. Turning to page 11.
Focusing on the current situation per business area and starting with the medical solutions, we have maintained our growth strategy, focus on margin, implemented cost adjustment and increased efficiency. We have in the base a broad customer base and long-standing close customer relations, and then of course focusing on innovation and sustainability. We have established our operations in Malaysia and continuing expansion in Poland. If we then jump into engineered solutions, we are advancing our market position. We have established a position in new product areas. A lot of focus on innovative and sustainable solutions, and we see success in new market approaches for the materials. We are also expanding our operations in Malaysia for engineered solutions. We are now opening up for questions.
Thank you very much for that presentation. And if you're calling in and have a question, please press star 9 to raise your hand and star 6 to mute yourself when you get the word. And we got the first person calling in. We have a call from Nordea. Please go ahead. You have the word.
Good morning. It's Carl here from Nordea. A couple of questions from my side, maybe starting off here a bit in medical. I mean, in the report, you grew 5% organically. IVD, as you maybe said, negative, seemingly year-over-year. Surgery is stable, but you're still growing, right? So you mentioned obviously the kind of eye business, right? Growing. What portion is it of group sales today? How important is it to sort of fuel the organic growth in the quarter here? And also if you could touch upon the profitability for that business.
Yes, we see potential in the eye area, and it's not a significant part of the group at all. And on the profitability, it's very similar to our target for the group, for the business area.
Is it a new business that you're ramping, or is it a business that you had for a while, but that you, for some reason, mentioned in this quarter?
Yes, we have had that business for a while, but it's been a good growth in the quarter, and we have expanded our relationship in that area.
And how come you had good growth in the quarter? Is it new contracts you're ramping up, or is it,
It's additional
what is
business.
behind the growth?
It's additional business to existing customers.
Okay. Okay, sounds fair. On Malaysia, could you mention a bit what the size it is of the planned production? A little bit, you mentioned obviously second half, but if you could give more details around the ramp would be helpful. And also if it's supposed to sort of replace parts of the Chinese production for either medical or engineered, and also what products you're planning to manufacture there, especially for the engineer side.
Especially for engineered, okay. So the expansion is around 3,500 square meters, additional to what we have. And the type of product is consumer electronics for the engineered, and for the medical is more drug delivery related products.
And will it be an addition, or do you plan to move part of China to Malaysia?
This is an addition for new growth opportunities.
And that is, as usual, I mean, the contracts you already have received, or is it more a speculation that you invest in the new facility? Because you did the same, right, in Switzerland. You hope for production volumes, but then we ended up in obviously quite an unfortunate situation with underutilization. So what conviction do you have in volumes coming in the sort of near term?
It's a new taken business that are supposed to be ramping after we have built our factory and started to install, and then the traditional ramp ups afterwards.
Okay, that is very clear. And the final one, if I may, obviously quite impressive margins in medical in the quarter. Also the sequential ramp of the margin. I mean, you mentioned pricing, you mentioned cost outs, mix. I cannot see a mix tailwind in the quarter though. But can you help us bridge it a bit more in detail, and especially also where you are in the US today compared to where you want to be? I guess US is one important building block to the margin coming back to, I guess, somewhere 13% or something.
Yeah, I think as we say in the report, the answer to the margin improvement is very much a broad improvement in all areas. And it's our long-term work with the margins, efficiency, different kind of pricing activities, and also some support from the growth in the quarter, of course. So all of these measures taken are bearing fruit right now and improving the margin. Then about the US, it's also part of this, but the answer is really a broad improvement, and that is really what we did see in this quarter. And we have seen the journey of the improved margin for some time now.
Very clear. Thank you.
Thank you.
And now we'll give the word to Adrian from ABG. Please go ahead, you have the word.
Yes, hello. A couple questions from my end. I guess first of all, on the medical margins, can you give some indication on Give Plastics and how much below the sort of average for the segment that it still is? Is it sort of starting to close in on the rest of the segment now?
Many things have changed since the acquisition, which now is almost 5 years ago, and it's not really relevant to do these comparisons. But we do still see some improvement possibilities in the US when it comes to the margin. So the rest of the world is performing better when it comes to margins. But it's improving, and we do continue to do a lot of work with that in all areas.
Yeah, understood. And in engineered solutions, regarding the margin lift, you said it was a broad-based effort. What about the overcapacity issue you had in China? Is that to a large extent resolved, or is that sort of still running on lower utilization?
It's improving, and that is one reason for the margin improvement this quarter as well, and has been for some quarters. I wouldn't say it has reached the business area target yet. Still room for some improvement, but it's part of the margin improvement compared to previous quarters.
Okay, understood. And I guess just a more broad-based questions on the margin. You raised the target not that long ago to 12%, and you're sort of already closing in on the new higher target. I mean, would you say that the opportunities to further increase margin from the current levels are becoming more limited, or can we expect a similar progression as we've seen in the last few quarters ahead as well?
I think the speed has been quite high in the recent quarters. We indicated a midterm target, the 12% for the group. And as you said, we are moving into that target, and the speed has been good. So maybe not that high speed going forward, but we feel confident that we can reach our target, as we explained during the Capital Market Day.
Yeah, I agree. And then a final one for me with the various different expansionary investments ongoing. I know you've issued the CapEx guidance for 2025 already, but can you sort of mention which of the investments are also going to spill over into 2026? Because it sounds, when you add these together, like we should perhaps expect above average CapEx in 2026 as well. Is that a fair assumption?
Yeah, I think it's a bit too early to focus that number, but of course we have targeted high growth going forward, and that will mean additional investment CapEx, and we have mentioned some extensions of group facilities during the year, and that will continue. However, it has been high CapEx during 2025 and will be still. So we do see a decline compared to 2025 going forward, but it will be on a higher level than previous levels.
Okay, understood. That's helpful. In that case, that's all for me. So thank you.
Thank you.
And that concludes our Q&A session here. Thank you very much, Christer and Per-Ola, for presenting today and answering all our questions. And I wish you all a great rest of the summer. Thank you very much.
Thank you all and have a great summer.